Wholesaling. Find a deeply discounted property, put it under contract, then sell that contract to another investor for an assignment fee of $5,000 to $20,000. You never actually buy the property. Zero capital required. What are the pros? No capital needed to start. Fast cash if you choose deals. Builds deal analysis skills quickly. What about the cons? Full-time sales and marketing hustle, not passive. And you need constant lead generation. Most beginners quit within 90 days. This is best for you if you have strong sales skill, high energy, and the ability to handle daily rejection. This is a business, not an investment strategy. Treat it like one or don't even start. I would put wholesaling as C out of all the real estate investment strategy. BRRRR method. Buy distressed, rehab, rent, refinance, and repeat. Done right, you recycle the same dollars across multiple properties and scale without needing new capital each time. Advantage? Recycle the same capital across deals, scale way faster than traditional buy and hold, but it forces you to add value. Disadvantage? Renovation overruns trap your capital, requires accurate after repair value estimates, and this is more complex financing and execution. This is for you if you have some sort of experience and understand how the renovation costs and local market values hold. This is not a beginner play, but the best scale-up strategy once you have the fundamentals down. I will grade this method as an A. Short-term rentals. Airbnb and Vrbo style rentals generate 2 to 3 times long-term rental income in the right market. A property earning $1,500 per month long-term might generate $4,000 to $5,000 per month as a short-term rental. Pros: highest per night income potential, flexibility to use the property yourself, strong cash flow in the right markets. But there are also some cons. Not passive, it's a full hospitality business. In some places, regulations tightening in most major cities. Constant turnover, cleaning, and dynamic pricing. These will work out for you if you are in high demand tourist or business travel market and willing to treat this like an active business. If passive income is the goal, look elsewhere. This is a solid B. Buy and hold. Buy a rental property, rent it out, and hold it long term, ideally forever. This is my bread and butter strategy. 4 forces work for you simultaneously. Tenants pay down your mortgage, rents rise over time, inflation erodes your fixed mortgage cost, and equity compounds quietly. I love it because it is truly passive once stabilized. Tax advantage: depreciation, 1031 exchange. Tenants build you equity for you, scales reliably over time. There are some cons too. This is pretty slow to see the results and requires capital for down payment. Occasional vacancies and repairs. It is the best for the long-term investors who want passive income, tax advantages, and generational wealth. The most reliable path to becoming a real estate millionaire quietly. This is one of my favorite, and I would put this as A+. Turnkey rentals. Fully renovated, already tenant-occupied properties sold with property management included. You wire the money, own the property, and collect checks. Maximum passivity. Someone else handles everything for you. What are the advantages? Completely hands-off from day one. This is ideal for out-of-state investing. No renovation risk or vacancy at purchase. There are some disadvantages too. You pay a premium for the convenience. You must verify all numbers independently. You need to trust the turnkey operator, which is a real risk. This is best for you if you are a busy professional who wants passive income but doesn't have time to source, renovate, or even manage deals. I would suggest always run your own analysis. Never trust the seller's projections and always negotiate the price. 30% of my portfolio are turnkey rentals, but I would put these as B+. Fix and flip. This is the exciting one. Find a distressed property below market value, renovate it, and sell for a profit. A good flip can net $30,000 to $80,000 in 3 to 6 months. That's a lot of money. This looks simple on TV. The reality is far less forgiving. Pros: large lump sum profits possible, faster returns than buy and hold, builds renovation and market expertise. What are the cons? Renovations almost always cost more than expected. Timelines almost always run longer than planned. Market can shift while holding can erase your profit. It will work out okay if you have construction knowledge, strong local market expertise, and the ability to manage contractors without losing your mind. This is not a beginner strategy and not passive in any sense. I would grade this a C-type investment. Mid-term rentals, furnished properties rented for 30 days to 6 months to traveling nurses, corporate relocations, remote workers, and insurance displacement clients. Higher rents than long form, far less turnover than short term. Advantage: above market rents without nightly chaos, usually exempt from short-term rental regulations. This is a stable professional tenant profile. What are the disadvantages? Requires a furnished unit, which needs upfront cost, less passive than long-term rentals. This is a very niche demand, heavily market dependent, best for you if you are investing near hospitals, universities, or large corporate employers and want above market rents without the grind of nightly rentals. The sweet spot most investors overlook. This is a B+. Next one is new construction. Buy land and build from scratch or purchase from a developer before a project is complete. Pros are lower long-term maintenance cost, attracts quality tenants, strong appreciation potential in growth markets. What about the cons? Highest upfront capital requirements, longest timelines of any strategy, full market exposure during the construction period. This is best for you if you are an experienced investor with strong capital reserves and a long-term horizon. This is not a beginner's strategy under any circumstances. This is a solid C based on the investment return you get. Hard money lending. Flip the script. Instead of borrowing money, you become the lender. Loan your capital to fix and flip investors at 8 to 12% interest annually, secured by the property itself. If the borrower defaults, you get the asset. What are the pros? Predictable high yield returns, typically 8 to 12%, no tenants, no toilet, no property management, secured by real estate. There are some cons too. Capital is illiquid for the duration of the loan. Foreclosure process if the borrower defaults, and it requires significant capital to be meaningful. This is a good strategy if you have significant capital and want yield without the operational headache of owning a property. This is a strong diversification tool once your portfolio is established. I would grade this investment as B. 1031 exchange, a tax tool, not a standalone strategy. Sell one investment property and roll all proceeds into a new one, completely tax deferred. Defer capital gains indefinitely as long as you keep rolling. I utilized this strategy to transfer 2 of my properties into 14, but there are some strict rules. You need to be careful. 45 days to identify a replacement and 180 days to close. Must use a qualified intermediary. You can't touch the money. What are the pros? Defer capital gains tax indefinitely. Compound your full pre-tax proceeds. Can go from one property to many in one move, as I did. What are the cons? Strict IRS deadlines with no flexibility, requires a qualified intermediary, forces you to redeploy capital very quickly. This is best for you if you are a buy and hold investor planning to sell and scale up. If you are reinvesting proceeds, this is not optional, it's essential. This is a solid A type of investment. REITs, buy shares of a company that owns income producing real estate through your brokerage account. Receive dividends from rental income. Start with as little as $10, no mortgage, no tenants, no property management required. That's why it attracts a lot of people. What are the pros? Entry with as little as $10, completely passive, zero management. This is also liquid, sell anytime like a stock, but there are some cons too. No leverage or direct control over the assets. The dividends taxed as ordinary income. No ability to force appreciation. This is best for you if you want real estate exposure inside a retirement account or you are not yet ready to manage physical property. A useful starting point, not a final destination. This is a solid B type of investment. House hacking. Buy a multi-unit property, duplex, triplex, or even fourplex, or a home with a rentable space. Live in one unit, rent the others. After 1 year, move out and repeat. FHA loans allow as little as 3.5% down. What are the pros? Entry with minimal capital, 3.5% down. Tenants cover your mortgage. Live nearly free while building equity. This is the best fast investment for most people. What are the cons? You live with or near your tenants. Requires owner occupancy for FHA. Property management is hands-on at first. This is best for you if you are a first-time investor with limited capital who wants to enter the market with minimal risk. This is the most recommended starting point for most beginners. This is a true A+. I would suggest everyone to start with house hacking. If you like this series, you will also like my mastermind program where I teach all the real estate investment strategy to build true wealth. Link is in the description below. I will see you in the next video.